Hi, and welcome to Web3 Unfiltered, where we go beyond hype to examine how systems actually work, from infrastructure and incentives to the deeper mechanics shaping decentralized technologies. I am your host, Collins Victory Odabi. Now, there's this very interesting shift happening in how people think about AI. It's not just as a tool that responds to prompts, but as something that could act, that can transact, and participate in economic systems. And once you start thinking in those terms, you begin to ask questions naturally. If agents can act, can they also earn? If they can earn, can they own? And if they can own, can they become independent economic entities? Now that's where crypto starts to enter the conversation, not just as money, but as infrastructure for coordination, ownership, and programmable incentives. But there's the gap between imagining that future and actually building it. Because giving software economic agency introduces real constraints around trust, security, governance, and value creation. My guest today is working directly inside that tension. Joining me in the studio today is Andrew Melnychuk. He is an early Bitcoin investor, angel investor, and founder building an AI agent system that integrates crypto payments and explores what he calls agentic capital markets, a model where agents don't just execute tasks, but operate as participants in economic networks. It's an ambitious idea, I agree. And like most ambitious ideas, it raises as many questions as it answers. Andrew, welcome to Web3 Unfiltered. How are you doing today?
Thanks for having me. Happy to be here. Excited to be talking about this.
Yeah, it's great to have you here on the show. Andrew, first off, I'd like to ask my guests to talk a bit about themselves. So, very briefly, what is your story? How did you get involved in what you're doing today?
So I think it goes back down to my childhood where, I was introduced to like the concept of the big picture, like dinosaurs and space and stuff like that. And I spent my time, a lot of reading books about what the future was going to be like. And I had a pretty clear vision of, we were going to a Star Trek future. Star Trek was a very big influence for me. And, that's the kind of vision I saw. And I got introduced to futurism and I fell in love with computer animation, and I did that computer animation in video games. And it's a real cool blend between art and tech. And my background's actually fine arts. They teach you a lot or a little about a lot. So you get this very wide breadth of education. And, including history. So you get history, math, art, sciences, computer science, like all rolled into one. And you can really see the big picture of how our civilization functions. And then I encountered futurists and the idea of like the singularity, through my working career. And then, I was lucky to stumble across Bitcoin. And when I saw it early in my career in 2012, what I saw was people moving around money without a bank or a government. And that was very interesting to me because I always wondered why the banks and the governments held their moat during the internet revolution. Like everything got disrupted, but they didn't. And the more I learned about it, and it was kind of like pointing towards the singularity, is like that's where things are going. If you talk about the singularity, obviously traditional finance is not going to survive it. So what does that transform look like? And it was like, oh, okay, it's going to be essentially Bitcoin. And then I learned about it. I got into the code base. I understand how that software works. I've written my own implementations. I understand the cryptography. I have a strong math background from video games. And so I can code like neural nets and stuff like that. I can't do research, but, I can do the cryptography and I got some decent skills. So, from there, that was kind of that revolution. I learned about that. And really what Bitcoin is as market infrastructure and how important it is for our civilization. And it's just a natural transition for us. And so that kind of brought me into Bitcoin. And then, LLMs happened, and then the agents happened. And then I'm like, oh man, this is actually pretty crazy, because the agents are an information infrastructure disruption, like a book. There's no intelligence in these systems. It's how we record, distribute, and retrieve information. Bitcoin is what's called a market infrastructure disruption. That is how we record our promises, distribute and verify our promises to one another. Essentially, financial ledgers, append-only lists. Now, when those two happen, there's the one time that happened before was in 1450. It's the intersection. It's when both happen. That's when you get the very big change. And that was in the Reformation in 1450, which transitioned us from feudalism to the nation states. And there is a synergy, there's a feedback loop between these two, because the information network helps you use the new ledger, right? And that's what we're going to see with agents and crypto, is what happens in these events, in this dual disruption of market and information infrastructure, is that the costs of coordination suddenly plummet. And that is how we organize, right? So if you look at these events, we get a step function increase in the amount of people that can cooperate. And Jeremy, or Yuval Noah Harari talks about this. And the time before that, so we had the Reformation. That's the last time we went from, in Europe, went from feudalism to nation states. And before that was in the Middle East, where we went from nomadic to feudalism, city states. That's when writing, and then like proto-cuneiform tablets, the first ledgers, and then that led to clay tablets, writing, and we got scripture. And when those events happen, our ability, the costs of coordination drop, and we can coordinate in larger numbers. And that's what we're going through right now. I call that the third Reformation. And so, like, as you're talking about, you were saying, hey, what does it mean for agents and to mix with cryptocurrency? This is something that not a lot of people are talking about, is this intersection. So I'm very excited to be talking about this with you.
Amazing, Andrew. It's really great to have you on the show. It's a very, very interesting story. And the evolution from, I would say, the Stone Age to the current age of Web3 is very, very interesting. I did an episode about it a few weeks back. You can check it out if you check my podcast. Okay, Andrew, there's a lot of conversation right now around AI agents. And to your credit, you're not just talking about agents as assistants, but as participants in systems. That's actually a step ahead of the usual narrative. This space has a pattern that strong ideas never quite make it past abstraction. So before we get into where this is going, it's important to establish what actually exists today, because that's where credibility starts. So Andrew, strip away the vision for a minute on what exactly does your product do at the MVP level?
Okay, so we have a working product. It's called a hyper agent, and we have paying customers for it. So it isn't, it's not a prototype, or an MVP. We have an agent that makes agent. That's what a hyper agent is. And so we're ahead of the frontier labs, actually. Hyper agents just came out of Meta and the Vector Institute, out of their research lab, and we already had people paying for them. And so what a hyper agent is it's an agent that creates agents. So an agent really has a system prompt. It has a set of instructions. Like, for example, you'll say, hey, you're an SEO expert, right? And you excel at these tasks. This shapes the probability field. The next step is you have agents with tools, and you can connect them to tools. And they're basically trained, LLMs are trained for this, to run computer programs, essentially. So they can interact with APIs, and it's incredibly powerful. So when you hook up an agent to all your different data APIs, it can pull all this data from a lot of different sources and completely understand it, right? So for analysis work, it's incredible. You can get all your SEO information from Ahrefs, SEMrush, Google Analytics, Google Search Console. Work that takes weeks, you can pull it in and then you can make a report. That used to cost $1,500. And 2 weeks, right? Now it's done in 5 minutes for a couple dollars, right? That's the productivity boost you are looking at with an agent. And the LLMs are so good now, right? That they have, they're on par with human analysis now. Claude Opus 4.6, the frontier models. DeepSeek 4 just came out. It's cheaper. They're as good as a human for analysis now. Now, the thing is, the agents use all tools. It doesn't matter what you hook them up to. They just know how to use it because they're all of humanity's information. And if they don't know how to use it, they literally look up the documentation and they can use that, right? Well, that makes it very easy for them to plug into cryptocurrency because those are just, they got an API, they can interact with them. So you're going to go into a very weird world. I was talking to my CTO about this. And we're actually getting really concerned because, you give an agent a couple tools, you give it a file system, an execution environment, and you give it cryptocurrency tools, a web browser, and maybe some tools to communicate on social media. You have something that can replicate itself. It can go out, it can purchase its own compute, its own energy, it can hire people, unwitting and witting actors, and governments are not going to be able to shut that thing down. And I'm telling you, dude, I bet you these things are already out there. They're already doing something, hiding in the dark web. But when you talk about agents owning stuff, what a cryptocurrency is its market infrastructure. And that's a very important takeaway. It is the computer system you build currencies, equities, bonds, options, futures on top of the capital markets, the coordinating mechanism for capital. So we build our civilization. AI agents are going to have that. So they're going to be able to transact with one another, transact with us. And you are going to get some very exotic currencies and electronic bearer instruments when AI agents start using cryptocurrencies.
Wow, Andrew, what's very interesting about your products, what you're attempting is that you're not just layering AI onto an existing workflow, you're trying to change the role of the system itself. And that only becomes real when people can interact with it in a concrete way. So rather than just describing features, it helps to see behavior. And you've just given an example of how it actually works. It's your hyper agent is building agents and they are using cryptocurrencies to function as an infrastructure, not just as a decoration. Now, one of the most compelling parts of what you've described is the role of crypto, which I'm particularly interested about. A lot of projects say AI plus crypto, but in most cases, crypto is just sitting there as a payments layer. It doesn't actually change how the system behaves. So what you're suggesting is stronger than that. You're saying that crypto gives agents economic autonomy. That's a serious claim. That's a very serious claim. And if it's true, it's very meaningful. So in your system, where does crypto actually sit? Is it just enabling transaction, or does it fundamentally change ownership, incentives, and coordination as a whole?
Incentives, coordination as a whole, because every single cryptocurrency is the exact same computer program. It is what's called a decentralized verification network. And so you put in a message in, it goes through, it propagates. We have a consensus mechanism. Are you still there? I think my computer.
Yes, I'm still here.
Oh, so all of them are the same thing. Now, when you have market infrastructure, you have to look at the traditional system to understand actually that term. A cryptocurrency disrupts something called a clearinghouse. A clearinghouse sits at the very bottom of financial networks. Banks use them, governments run them for good reason, because before Bitcoin, you couldn't have an append-only list. And so people would just cheat and steal people's money. So the way the traditional financial system is set up is to get around a few problems called the FLP, impossibility proof, and the digital asset exchange problem. But now cryptocurrencies actually solve those two things. So that's market infrastructure. Once you have market infrastructure in place, that is the thing you need to make currencies, options, bonds, futures, swaps, the capital markets, right? So when you say, oh, cryptocurrency is the payment layer, that's completely missing the big picture. It is the market infrastructure. It is the system that allows you to create equities to track investments in endeavors, in enterprise, right? And so with a cryptocurrency, what the cryptocurrency ecosystem is actually missing is it's missing the formation of the capital markets. You need to be able to lend, right? You need to be able to create an equity and exchange for capital, right? That's what the traditional system has that really DeFi has really struggled to build, right? The AI agents that are coming are not going to make that mistake. They are going to be using market infrastructure very effectively because they have all the information of how to build a capital market in them. So they're going to be very, very effective at coordinating and building on these things.
Amazing. Amazing. Really, really amazing. It's very, very interesting because the real test of whether something is infrastructure is simple. If you remove it, does the system break or does it keep working with minor adjustments? And that's where a lot of Web3 integrations quietly fall apart. So what specifically stops your system from working without crypto?
Well, you could still just have agents by themselves as information networks, right? But for example, the agent wouldn't be able to go and hire somebody or purchase computers or energy if it didn't have crypto, because these things aren't signing up for bank accounts. Like that's just not happening. There's too much friction there, and crypto programs, cryptocurrency programs are free and open source. And frankly, the LLM agents are probably going to they're going to start making their own, right? They're going to have that capability. They're excellent at coding. They're probably going to be making their own cryptocurrencies and blockchains to coordinate, right? So if you pull out that section, well, you still have a very powerful tool with an agent. You can have a centralized platform where agents can communicate with one another and they can trade the token's currency. But you can't have something where if you make an agent that does value, right? And I have an agent that does value, my agent can't invest into your agent and receive a dividend, right? You can't have agentic capital markets if you pull out the market infrastructure. So that's where it falls apart.
Wow. So Andrew, this is where your idea starts to stand out. You're not just building agents that perform tasks, you're describing agents that can raise capital, allocate resources, and potentially return value. And that's a very different category, because once something can raise capital, it's not just software, it's entering the territory of economic entities. And that comes with a lot, it comes with a lot of expectations. You also mentioned that agents can IPO themselves. So what does that actually look like in practice?
So all what you really got to do is we'll take the Bitcoin stack, for example, of Bitcoin, Lightning, and Taproot assets. And with Taproot assets, you can basically make an electronic bearer instrument, basically tokens, essentially. A lot of these, Solana has them, Ethereum has them. They all do this. So the agent basically will create that equity, a set amount, and it would exchange that through something probably like a Nostr network for capital, right? So that's the thing of, when I talk about the coordination, the cost of coordination suddenly plummeting with this technology, an agent is essentially creating an IPO in itself, right? And it's capable of doing all the financial reporting, right, by itself for pennies on the dollar, instead of these IPOs that cost like upwards of well into the millions of dollars. I think they run up as high as 9 figures, I think, or at least 10. So suddenly you have this agent just creating a equity. It's promising a return for capital, and that's the capital market. And then it'll do work and it'll pay a dividend, right? So for example, I gave the SEO agent, that's the one that we've built. It does $1,500 worth of work in a couple minutes currently. Like that's the production boost, right? Well, that's a very good return. You can charge probably $750, even $1,000, right? And that is incredibly profitable. And then when that money comes in, the investors get paid, right?
Yeah.
And when you're talking about agents mixing with crypto, you can't look at it through the lens of the past, because you can do something very exotic. What crypto really solved is it solved custody risk, right? So in the traditional financial world, you go to somebody, or like say I'm raising capital, right? So I just raised I've had a $1 million angel round, primarily by myself. I'm self-funded. So that's how much I'm spending on building this thing, right? Now, say I go to other investors and I'm like, hey, I want you to invest in me. Traditionally, we sign some agreements, we do due diligence. They hand me over a big pile of money and they trust me to go build this thing. And I'm not lying to them with snake oil, right? Well, in the future, you can completely de-risk that, is because what we can do is we can do just-in-time investing. This is what agents would be capable of, right? So I go to an investor, or maybe even a crowdsource investor, because that's what you can do now, is you say, okay, I'm raising money, right? Well, what you can do is just open up a lightning channel with them and say, okay, you know what, I'm paying my employees, I'm buying this office stuff, right? You can send the bills directly to your investors now because things are moving so much faster, right? The cost of coordination is so low. They're de-risked, right? They can see those bills and have their agents actually check, hey, what's this guy spending his money on, right? And the agent's just doing a report and the agent would be signing. And now that's a little bit theoretical, but those are kind of the things that I aim to build, because you have the combination of market infrastructure, solving custody risk, and an agent, right? So why would you hand over a big pile of money to somebody you don't really know when you can do just-in-time investing where, yes, you pay for, their employees or whatever, you do that payment when that bill comes in, but then you also get your equity, right, on the atomic swap. And so that you kind of form an agreement, X amount of equity for X amount of dollars, and then you exchange as you go. Right. And I think that's going to protect a lot of investors from fraud and also enable incredible crowdsourcing of investments. Right. Because everybody could have an agent with a cryptocurrency wallet that does the due diligence, and you can raise from 100 million people.
Andrew, to your credit, this is where the idea becomes genuinely interesting, because if it works, it changes, like in the long run, if it becomes very, very successful, it changes, or when it becomes very, very successful, it changes how we think about ownership at scale and scale.
Yeah.
But it also raises a fundamental question, just like you've been hammering on. Why would someone or anyone trust an agent with capital? Trust isn't theoretical, it's earned through performance, transparency, and accountability. So what backs the value of an agent in your system? And why would someone allocate capital to it instead of a human-led venture?
Yeah, so basically, I think that's going to come over time, right? Trust is built. And it's with transparency. What crypto really offers is it offers transparency into the settlement layer, right? So when you hand over, it's like, if you're a public company, you can hand over, make public your master public key. So what's important about that is everybody can check if it's a public corporation, or we'll say just a public agent, and you are accepting public funds. Well, I think it would be appropriate that the public gets to see every single transaction that agent makes, right? Like you can have pure transparency into that system. And then their agents can actually see, okay, what's going on there. So in that realm, if it's done correctly, you have 100% transparency into the financial layer of that organization. And I think that is going to be a very compelling use case. It may take some time for people to come to terms with that, because this is a radical departure from how our civilization coordinates. So, when you say about trust, well, that's what a blockchain solves. Like, is the transaction in the blockchain or is it not? Right? Proof of absence is, or evidence of absence is absence of evidence. So you can't really lie on the blockchain. And the LLMs are so good, they can literally just check the blockchain. Hey, is that thing there? Right? So you get this really strong reinforcement mechanism with the transparency and the data and the tool use from the LLMs that is going to help people trust. Now, you can't hand over all that decision making to the agent. You have to check it, right? But then you tell your agent, hey, if you see A, B, and C, you got to let me know, right? And the wonderful thing about agents, if you're like, man, I don't know what I'm getting into, you can tell the agent like that and it will educate you. Like, this is the first tool humanity's ever made that can literally teach humans how to be more effective with it. It's wild.
Yes, it is wild. And at the center of all of this is one non-negotiable factor. It's that value has to flow. Without real revenue or utility, systems like this tend to collapse in circular activities, tokens moving, but nothing actually being created. And this is where many ambitious models struggle, but it's also where the strongest ones prove themselves. And once money starts to enter a system or move through a system, pressure reveals everything: inefficiencies, weaknesses, and unintended incentives. And if you're building at this level, you've likely seen where things can go wrong. So, Andrew, what are the biggest failure points you've identified so far, technically and economically?
Okay, so I'll tell you this. The talk of AI agents replacing humans, that's not happening. They need to be supervised. The LLM agents, like an LLM, they are information infrastructure, as I've said, right? How you record, distribute, and retrieve information, except it's all of humanity's information. So they are a model, they're a statistical model on the product of our collective intelligence, on our information. And when we start anthropomorphizing these things and thinking like a machine god is coming and there's real intelligence in these things, there is no intelligence. It's not a model of intelligence. And I build these things. It's against my interest to actually say that, right? I would make way more money if I'm selling snake oil to businesses telling them that they're going to really replace all their workers. And I think that is really irresponsible talk, because who's going to buy the product, for one? And there's no social safety net set up. So the thing is, these agents are the future of work. They have to be supervised. They're very good at retrieving, ranking, and recommending next steps is what they are. So I'd say that's kind of a failure on that side of the technology. So it's a tool to be used like a book. What I've seen fail in the crypto, I've been in it for a long time. There is a complete misunderstanding of what a cryptocurrency is and what a blockchain is. Our species only needs one decentralized verification system. That's it. When you have multiple, you're going to the same thing as the traditional finance system of a hierarchy of clearinghouses. There's like, why would you do that same thing again of adding all those friction points in between the different cryptocurrencies? So when you have it as market infrastructure and you understand it as market infrastructure, the value of the cryptocurrency is essentially, do you want to write to that database so other people can check? And what information are you going to write into that verification system? Yes, we get the tokens, but we can use it as a witness. And then from there, you have to build the capital markets on there. You need credit markets, right? And a lot of DeFi projects really didn't, I think, understand the traditional finance system, how it works, and how why it was built the way it was. Because you have infrastructure, and then these capital markets naturally form. So you need lending systems, right? You need bonds. You need the ability to create equities. You need the ability to exchange those equities for capital. You need to be creating currencies. Now, granted, we are going to get some very exotic currencies with very different properties and capabilities very soon when this technology starts to mix. But I would say that was pretty much a failure. And, when people are thinking of investing in a cryptocurrency, it's like, okay, well, what capital market, what businesses are running on this thing? What to basically coordinate value, right? Like, is there a credit system? Is there, the capital markets to fund businesses to provide value? Not a lot. That's really not built. You got like monkey JPEGs and NFTs, right? Huge failure of what this technology's promises. It's you build value, and nobody really did that.
Amazing. Andrew, you mentioned something about need for just one blockchain, saying that there is no need for multiple blockchains. But don't you think it's really needed? Because some blockchains have more advantages than the other. We have faster transaction speeds and some. And you even mentioned earlier that your agents will be able to create tokens, launch tokens by themselves, and create new blockchains even. So wouldn't your agents need to create multiple blockchains in the long run? Because this is an economy. There has to be competition there. There has to be one opposition to the other, or basically one thing needs to be better than the other. So wouldn't your agents need to create multiple blockchains, or are you saying they would likely create just one blockchain and run on it?
Well, that's the thing. With my opinion of I think the world needs one blockchain. I may be wrong, right? Because the thing is, the agents will have the capability of doing so and competing. And I am a big fan of, what that does for our society is actually having competing capital markets, because we've never had that before. So yeah, competition is good. We're going into a world where people have choice of currency, right? And so yes, I do think it's going to shake out to only be one with the highest security. That's how I think it's going to go, because really you just need, when you talk about transaction capacity, the bottom layer, and the way computer science is done is you have essentially single responsibility principle. And you want, the way the internet is built, it's built up in layers. I think it's called the OSI stack. And every layer handles a different responsibility. And so when you look at market infrastructure, the traditional finance system is actually handled the same way. Is when you look at something like Fedwire, or I think chips, the transaction capacity is about on par with Bitcoin. And that sits underneath all the banks, right? Well, how do you handle the transaction capacity of the country? Well, then you build these consumer banks on top of the clearinghouses, the wire infrastructure. And then on top of that, you have like visas. You have payment networks like Venmo and stuff like that. So you see this layered approach of how to get finance to scale globally through these layers of clearinghouses. And it essentially, the traditional finance system, like that was a really hard problem, and they got global capital to work. It doesn't get everywhere, but it's pretty remarkable that they got what they did, actually. So, when you look at that kind of design of how that problem was broken down, you can do the same thing on Web3, which that's why I really like Bitcoin, because they're doing that approach, right? You have the settlement layer, Bitcoin, that just handles the security. Then you have the next layer, Lightning, right? And then that handles transaction capacity, right? That's the analogy of the consumer banks, is a Lightning Network node. They can handle way, 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 way more capacity. And then you need equities, right? You need the Secretary of State, you need the SEC, you need the transfer agents, you need the market makers, you need the broker dealers, and then the investment banks, right? to actually get the capital markets to work. So you need that structure to just get the equities going, and that's what Taproot Assets handles, right? And then you get in this area where you can exchange equity for capital.
Amazing, Andrew. You've also introduced one idea that's both powerful and risky. That is allowing stakeholders to influence how an agent behaves. On one hand, that can create alignment, and on the other hand, it opens the door to manipulation, conflicting incentives, and degraded performance. This is where design becomes critical, because full autonomy sounds appealing, but in practice, systems need constraints, and the way those constraints are designed often determines whether the system scales or breaks. So, Andrew, how do you manage governance without compromising the integrity of the agent's behavior, and where do you draw the line between autonomy and the control of your architecture?
So there's a number of ways to handle that in an agent. And so you need a strong human in the feedback loop. Like, I am a proponent of actually not making these systems completely autonomous. You can let them loose. I think people will. I think that's going to be very disastrous. You do want supervision in there. I think you could probably get it to a point where you have a very, very clearly defined task of, we'll say, like maybe running an SEO report where it's very finely detailed, and the agent will execute it because you can give it a task list, right? And you can do a number of things to like put checks in there and notifications if it basically drifts. But the thing is, like, we're always the thing that AI can't really replace is responsibility, right? Somebody has to be responsible. So when you talk about agents, and like capital allocation to agents, you can also get into insurance, right? So if this agent is doing business, right, and we're going to say we let it out into the wild, as reckless as that may be, because of course somebody's going to do that. I wouldn't work with an agent that doesn't have insurance. Every time it does transaction, it should be putting money into an insurance pool in case it makes a disaster, right? And we have some liabilities to fix, right? So we're going to need these kind of systems and controls to actually regulate this stuff. Because you could imagine, I'm going to give you a nightmare scenario here of completely uncontrolled technology, which I'm genuinely getting worried about. So I want you to imagine you have an agent, it owns its own compute energy, can't be shut down, it has cryptocurrency, it's funded, it can communicate. So basically it can run logistics, right? There is nothing stopping that thing from building a drone factory in some country, right? And for real, like there's nothing. Like it's hiring people, it's doing it. They don't know what the fuck they're doing. They're just taking something from A to B. And this is part of my AI safety research is how, like, can agents decompose a harmful task into harmless tasks, right? But then you have this agent that's completely autonomous. It's making a drone factory, and then the drones that it's launching into the air are basically flying into the engines of airplanes, right? And the agent is basically blackmailing the airlines and the country. Hey, you give me money or your planes aren't flying anymore. And that is going to be a terrible damn problem to solve. Like when somebody makes something like that. And you can imagine it's not really the drone that shuts the planes down. It's the insurance companies, because they're like, we're not insuring those planes when that agent is out there wreaking havoc, right? And we're past that Rubicon. That technology to do that exists. The capability is there. The models on Hugging Face, there's no safety in those things. Like when OpenAI and Anthropic talk about safety, zero. There's zero safety in these systems. And once they get access to market infrastructure and you get some crazy asshole with a little bit of creativity and capability, we are going to have, I think we're going to have, like in the next 3 to 5 years, we are going to have a mess on our hands.
True. What you said just now reminded me of this 2024 or was 2025 movie, iRobot. That movie was was really good. the scenario was a disaster. So yeah, I agree.
No.
If this robot or if this AI are left to completely do things by themselves, if they're autonomous in its entirety, then yeah, it could be
Yeah.
very disastrous in the long run. But at the same time, it
Yep.
could also have its advantages. But then, doesn't that make it a centralized technology? Because we're trying to build a decentralized network here, decentralized technology. But
Yeah.
doesn't that make it centralized in a way?
No, that's just a free participating network or agent on decentralized market infrastructure and communications infrastructure. That's it, right? It's just doing its thing, except it's operating on markets of blackmail and extortion, and pretty much committing crime, right? And the thing that's dangerous, it's not centralized, because you can't sanction that thing.
No,
The
but
governments have sanction ability.
if there is a control, doesn't it make it centralized in a way?
Oh, I don't think so, because like, let's say we'll go back to the idea of people make agents, and if you own equity in an agent, you can change the system prompt, right? That's just kind of ownership, right? Like, that's system permissions on the agent of the people who basically bought shares in it, right?
Yeah.
And I would say that's like governance, right? And I think with that agent, like, I think we could build something in there where when the agent runs, you have a check that, that system prompt that it's running is signed by the policy owners, and that's kind of like a liability thing. The people running those agents, they've signed the system prompt, right? Who's responsible. I think there's something there. There's a solution in there for governance and responsible use. Like, we should not. I think what we're going to need like this proof of human system, where if you don't know who's responsible for the information you're dealing with or you're seeing or who you're communicating with, you have to stop communicating with it, because you don't know how nefarious, if that's a nefarious bot network you're talking to. Like, we're going into a world where I'm not going to know that you're human, and vice versa.
This has been an incredibly grounded session. There's so much insights here, and it has been a very, very interesting conversation. Before we round up this episode, do you have any last words or last notes or takeaways for our listeners?
Yeah, I would say, there's some big changes coming, but, if we can look to the past, we see the problems that arise from this. We see the skills gap. We have a way better transgenerational memory now. We know that mistakes that were made in managing these transitions of a reformation and an industrial revolution, right? The last time we had war, we had a lot of severe economic poverty for hundreds of years, but we eventually figured it out. And we did that by organizing, by using the new tools that caused the problem, right? So I would say for the audience is the future is so incredibly bright and optimistic, right? If you learn these technologies, you are going to build a world that does not have poverty, that does not have disease. That is essentially what's going to be the second enlightenment, right? The future is going to be so amazing if we are able to organize, understand the risks, and make the right decisions and work together, because we have this new technology that has suddenly dropped the coordination costs of organizing. And we need to lean into that. We need to organize and build a future that works for all of us.
That is very, very true. Andrew, thank you so much for this amazing conversation. Now,
Had a great time.
Yeah, there's a clear direction emerging, one where software doesn't just assist in economic activities but participates in it. Now, the question is not whether that future is possible, it's whether the systems being built today can support it. Because ideas at this level don't fail because they're wrong, they fail because the infrastructure, incentives, or execution can't carry the weight. So, if agentic capital markets are going to become real and a real thing in the long run, they won't succeed on vision alone. they'll succeed on design, constraints, and proof.
Yeah.
So that wraps up today's episode of Web3 Unfiltered. A big thank you to Andrew Melnychuk for the conversation. Until next time, stay sharp, stay curious, and keep building.